Hey guys, it's Clint Coons here, and in this video, I'm going to discuss why LLCs fail. Okay, let's get started. So why do you hear about limited liability companies not protecting their members or the manager in the event of a lawsuit? Why are they failing? Well, it really comes down to how people operate their limited liability companies. I mean, there's a few steps here that I'm going to go through that can pretty much prevent your LLC from failing in the event of a lawsuit. So what is the first mistake that I find people make when it comes to their limited liability companies and why they fail? Number one, they fail to renew their entity. So what do I mean fail to renew? So here's the deal. Each and every year, most states, 95% of the states require that you file an annual list or some type of annual report with the state and pay a fee. Some states it's every other year. But whatever it is, filing that each and every year is required in order to keep your LLC compliant. Failure to file that annual report will result in disqualification of your limited liability company, where it can move into delinquent status and then become administratively dissolved. Now, I've met many people who have come to me before and they say, I have an LLC set up in this state, or I have an LLC set up over here, and we pull up the LLC only to find out that it had been dissolved 4, 5, 10 years ago. Most recently, we had a client that wanted to renew an LLC in Nevada that they had let go defunct by not renewing it because they forgot. Many times it's because people move, and the fee to reinstate that entity was over $8,000. Now, other states, it's impossible to reinstate it. So this can create problems for you. Try to sell property in an LLC that's been administratively dissolved, you're not going to be able to do it. You're going to cloud the title on the property. So that is the biggest mistake people make with their LLCs. That is by not renewing them. All right, so the second mistake that we make with LLCs is failure to follow formalities. What do I mean by failure to follow formalities? All right, so here's a situation. There was an individual that attempted to transfer his membership interest to his spouse to avoid a creditor's claim on his LLC. Now, he probably would have succeeded, but the problem is that the steps he went through to transfer his interest were not consistent with what was required in the operating agreement. So that transfer was held to be null and void, and then that individual, the creditor was able to hold that individual liable for the debt, saying you are in fact a member of this LLC. So when you set up a limited liability company, there are certain formalities you must go through in order to take certain actions. And if you don't follow those formalities, then you run into problems like I just described, or better yet, they could say that you're operating outside the bounds of the LLC and you have personal liability. So following formalities is really important. Third thing, co-mingling funds. All right, so what do I mean by co-mingling funds? Let's say that you're going to receive a check from someone. Maybe it's a sale of a piece of real estate that you held in your own name, and you direct them to send that money to an LLC that you set up and not to you individually. So by doing that, what you're doing is you're taking personal assets, money that was owed to you, and you're directing it to be paid into your LLC. That is what we mean by commingling. You're taking your personal monies and you're putting them in your LLC. The way that would work, or should work, if I had an LLC right here and I was going to receive some cash from someone, I would have them pay me the money, and then I would turn around and contribute it to the LLC. Now, I know it can say, oh, Clint, I can just avoid a step. I'll just have them pay it directly to the LLC itself. But by doing that, though, you're starting to commingle what is personal versus what is business. Now, yes, it is the same funds, but it is the steps in which you go through to put those funds into the LLC that is important. And that's what you want to avoid, is this commingling of taking personal assets with business assets and making them essentially indistinguishable. All right, so the other issue you run into, the fourth issue with having an LLC that causes them to fail, is paying for personal expenses. all right, through your limited liability company. So your LLC, maybe it's a rental LLC over here and you have a little cash inside of there. You've got $6K. Well, you want to put a down payment on a Kubota tractor. So what you end up doing is you write a check from the LLC to the Kubota dealership to buy that tractor that you're going to use personally, or maybe it's on you've got a small little farm you want to run it around on. It's not part of your business. Actually, you should have figured out a way to write it off. Hopefully you're working with our tax department, sidebar. But anyways, you pay that $6K over to the Kubota dealership for what is personal. What you're doing now is you're setting that LLC up for failure. So if you get sued, they're going to pierce the veil because now you're using these funds as your personal checkbook. Just like what I said up here, don't commingle funds. Paying for personal expenses, the way that would work is you would take a distribution to yourself of $6,000 and then you would write the check to that Kubota dealership for that tractor that you're buying, okay, and not pay for it out of the limited liability company itself. Now, the fifth reason I find taking consistent distributions. Okay, so what do I mean by taking consistent distributions? So with a limited liability company over here, you can, of course, you know, it's your LLC. I just showed you how you would take $6K out to buy your tractor. So let's say I have this LLC set up here as a property inside of here, and the property generates for me after expenses $1,200 a month, and I'm down here. Now, it makes $1,200 a month after all the mortgage and all the other expenses are covered. So each month, on the 8th of every month, I take out $1,200 and I put it in my personal checking account because I'm the member of that LLC. Now, the problem with taking out distributions like that on a monthly basis, the 8th or maybe it's the 10th some months, and it's always the same amount or really close to it, is that if you're ever involved in a lawsuit and somebody gets a judgment against you, so here's a creditor over here, they get a judgment against you and they put a charging order on your LLC stating you owe them $100,000. So if you watch my other videos on charging orders, what it means is that if you take out a distribution like you did right here, you have to pay it to your creditor. Well, obviously, I would stop taking distributions if the court told me if you take out another distribution of $1,200, you got to pay it to your creditor. Well, I'm done taking distributions. But the problem you have is that you now have a history of taking out $1,200 a month on the 8th of every month. And if you stop, the creditor could come back against you and force you to restart. Now, you're probably scratching your head going, well, how can they do that if I control the LLC? Because the argument they're going to make is that there was no legitimate business reason for you to stop taking those distributions. That you only did it because there was a creditor who has a charging order on your interest. So when it comes to pulling money out of your LLC, don't take it on a consistent monthly basis. And don't take the same amounts. Let it accumulate there for 3 months. And then maybe you pull out $2,800. And the next time, maybe a month later, you pull out another $1,500. And so different amounts at differing times is the way to go when you're running your LLCs. And then the sixth point about this, which is, again, one of the most important mistakes, is people do not read their operating, I'll just put OP, operating agreement, their LLC operating agreement. You don't know what's in your LLC operating agreement. You need to read it. Because if you read your LLC operating agreement, it's an instruction manual on how you're to run your business. And if you're ever involved in a lawsuit and you're not running your business per the operating agreement that you've set up for yourself, then you've opened the door to liability, where they could pierce the veil of the LLC and hold you personally liable, or reverse pierce it, sue you, and then break the LLC to get after the assets that are held inside of there. So these are the 6 things that I find that I think are mistakes that people make that cause their LLCs to fail. And of course, there are other ones you can come up with that could be on this board as well, but I wanted to give you the top 6 from my point of view. Hey guys, if you like the content, be sure to subscribe to the channel, hit the like button as well. And if you want to set up a strategy session, be sure to go into the show notes and set up a strategy session with Anderson so we can talk to you about setting up the proper limited liability company for your investing business. Take care.